So I want to first start this video by letting you know that I am not an accountant. And, certain people would say I'm not qualified to give tax advice, and I'm not going to be able to advise you personally. But let's talk about your first question, right? How do you minimize the taxes on your 401k distributions? The challenge to that question is your 401k, those distributions are counted as income. Think of it as all of the years that you've been working, you've been taking a little chunk of your salary and putting it in this bucket called 401k. And now you want to access that bucket. But what happens? Who else wants access to that? It's income, so Uncle Sam wants access to it too. And depending on where you are on that tax bracket and scale of taxes, that's going to determine, where you're getting taxed on each of those distributions. So if you're at, the 25% income tax bracket, 25% is going off to Uncle Sam. If you're at 32%, 32% is going to go. So you have to think about that. And the way that we try to plan for our clients is to allow them to manage to those tax brackets. I don't know what the taxes will be 5, 10, 15 years from now. Heck, they might change in the next year or two. But what we can do is start setting up today different plans that allow us to manage to that tax bracket. The other challenge that we face in retirement when we want to minimize our income taxes is we've probably lost a lot of our write-offs, right? You had a mortgage, you paid that mortgage off, you don't have a mortgage interest write-off anymore. The children are out of the house, there's no longer the child tax credit, you're not working and deferring any of your salaries. So really it's a challenge if we don't set up early on how we're going to manage to the tax brackets. All too often the challenge is that people like yourself have just been saving in one bucket. Every year, every paycheck, it's going into this tax deferred 401k, and they're thinking, hey, I'm saving on my taxes, but it's not. You're just deferring. It becomes a larger and larger pool of money that eventually, when you start taking from it, it's going to be taxed. So I think about that question in two ways. First, some people are thinking, well, how much can I defer from taxes? Which, like we just talked about, you're not really saving on taxes, you're just deferring it to a later date. And depending on your situation, that could be different amounts, right? Like SEP IRAs allow you to put in a lot more money than just a traditional IRA. So that's always a moving target. But from a tax-free standpoint, can I do savings tax-free? Well, there are vehicles out there that we can start to put money into today that we can defer taxes for a later date. And when we take those distributions, they can be free of income tax as long as we're setting them up properly and doing things in the right order. So what you can actually do is start to save that money. You're going to put in post-tax dollars today, right? And all of the growth, we're going to defer that growth from taxes. And then when we go to access that money, we can access it in a tax-free manner.
Hey, what's up everybody? It's Rob Gill. We have thoroughly enjoyed creating this channel, and I got to tell you, this was a vision of mine, way back in 2015. To be where we are in 2020, it's so much better than I ever even envisioned, and a lot of time, a lot of effort, a lot of running into the walls, figuring out what works, what doesn't work. So we want to continue to, bring to you all the information that can help you make really good, sound decisions. Go ahead and hit that subscribe button, and when you want to get the alert, ring that bell.
So there's multiple vehicles that can do that, and depending on your level of income, you can put away a lot of money, or you might be stuck to certain guidelines and you're putting away a smaller amount of money. Either way, the point is that we pay the tax today so that in the future, we don't have to pay income tax. There's no more planning on those distributions to the bracket because our income tax at that point is zero. For us, having zero income tax is really great for two reasons. One, I don't have to worry about what tax brackets are going to be in the future, but two, I know that the money that grows to is the actual dollars that are going to be able to be spent. So it makes our planning a whole lot easier when you get into retirement. What are the options, right? We have a Roth IRA, which comes with some strings attached to it as far as how much you can put in, right? Which is what you're asking, how much can I save, right? And that's determined by the IRS guidelines. What they're looking at is how much income do you earn, and based on your level of income earning, they're going to let you put in up to a certain amount. What happens though is if you earn too much money, they're going to say this great tool that we have that allows you to save now and not pay taxes later, you can't do that anymore. The other option that you have that doesn't have any income limitations, it also doesn't have any barriers as to how much you can put in, that vehicle is life insurance. And that comes in many forms. We have indexed universal life insurance or whole life insurance. Those types of life insurance that build cash value, allow us to defer any tax on growth, and then access the money in a tax-free manner in retirement. It's a great way to build an income stream when you get to retirement. Either choice that you're looking at, we've done videos on both, right? So you can check out more of our videos on whole life insurance, IULs for indexed universal life insurance, or Roth IRAs. So we are here to educate you beyond just the YouTube channel. If you'd like to speak with one of our team members, click the link below and we'll have somebody reach out to you.